This 3-step strategy prints me days like this, and today I'm going to show you exactly how. I've been trading for about 8 years now, and that time I've backtested probably over 30,000 trades, indicators, time frames and whatnot. And this is hands down the best strategy ever I have found. I call it an A+ strategy. In this video, I'm going to break down the entire system and show you a live example from today's chart on SPY so you can see the power of this by yourself. And yeah, the results look crazy, but that's not what that matters. What matters is how do you get to that level. And that's what we're here for, so you can learn the system and take clean setups for first 90 minutes of the day and done with it. You only need 3 steps. Step 1, you need to learn how to identify the key levels. Step 2, you need to confirm the trend and the time frames. And step 3, A+ entries using your opening range breakouts, your level flags, plus the volume weighted average price, which is called VWAP. But before we jump into this, let me tell you the trading rule that changed my life forever. The 90-minute trading rule. You never need more than 90 minutes to trade. The first 90 minutes of the day is going to give you the 80% of the cleanest move for the entire day. After that, the market is going to get slow, get choppy, and that's where most traders give their money back. Everything that they make in the first 90 minutes, they will lose the entire amount after the first 90 minutes, literally. I'm sure you know what I'm talking about. And after you're done with the first 90 minutes, and hey, you're done for the day. Less stress, less noise, and more consistency. All right, let's get into the step number 1. Identifying your key levels. Now this is the part 99% of traders mess up because they're either making random lines on their charts from 6 months ago, or they will have like 15 indicators on their chart and do not know what they're looking at. So here's exactly what you need to do. First, you're going to jump on a 60-minute chart, on an hourly chart, because that's where we are going to draw all our levels from. Now once you're on a 60-minute chart, go to the settings of the charts, go to the symbol, go to the session, and make sure it says extended trading hours, press OK. And this will add the pre-market and aftermarket data on your charts straight away. The second thing that you can do is go on a line chart on your charts, literally at the top, line charts. Once you have this, you're going to draw some levels. Basically every single bend that you see on the lines, pretty much like you saw a little bend here, you saw another bend here, another bend here. Every single curve, like 3 or 4 towards the upside, 3 or 4 towards the downside. Now we cannot see anything, so that means you're going to go in the past and try to draw the levels. And you have drawn all the levels where the prices have touched multiple times. These are hourly levels, and they're the backbone of the entire strategy. These levels repeat every single day, and they're the reason why I'm able to catch the simple trades, clean plays with zero confusion. Now you might be like, why hourly levels? Because smart money is using hourly levels and hourly charts to decipher supply and demand. And that's where the big money reacts. Next, what you're going to do is you're going to mark your pre-market high and the pre-market low. That means right before the market actually opens, you need to mark your pre-market highs and the pre-market lows right away. Because these two levels are going to tell you instantly where the market is going to trend, or it's just going to be chopped for the rest of the day. And if the prices are stuck between the pre-market high or the pre-market lows, or yesterday's highs or yesterday's lows, that thing is called NTZ, which means no trading zone box, and you do not trade inside that box. Now you have identified the critical levels. These are not random levels from last year. These are only the levels that have been respected recently, where the price actually bounced or rejected within the last few days. And those are your targets, and these becomes the areas where we're going to take profits. Now, a lot of people who do not know how to trade, they use levels to get into a trade. We know how to trade. We are going to use levels so we can jump out of the trades. That means all these people will be eventually just paying us for our life that we are living. And that's literally it for your step 1. Your whole trading day depends on these levels. Without them, nothing else works. Not time frames, not ORBs, no VWAP, no nothing. In step 2, I'll show you exactly how to confirm the direction of the market, because levels alone are not enough. You need to know whether you're going to be trendy or not. That's where 200 simple moving average and the correct time frames come into place. To confirm the market direction, I use different time frames and the 200 simple moving average and also opening range breakout. Most traders lose not because of the bad entries, but because they are using the wrong time frames at the wrong time of the day. So here's how I trade. For first 30 minutes of the market open, I'm using the 2-minute chart. Why? Because that's when the fast moves are happening, and that's where opening range breakout is happening. What's opening range breakout? You can literally use an indicator for opening range breakout, but let me tell you what it is first. Opening range breakout simply means the range of first 15 minutes of the market open. That means 3 5-minute candles right at the market open. So whatever the highest point or the lowest point of first 15 minutes on the market is, you're going to mark those levels on your charts. And the indicator that you can set up for this is called ORB. Once you go on your indicators on your charts, search ORB and set up this indicator called ZZZ Crypto 123. Just click on this indicator once, and you will see these 2 lines running across your charts. What you need to do is double click on this. Now what we're going to do is we're going to turn the settings off. Your settings should be 1 to 15 minutes only. Then go to style. You can leave essentially everything exactly how it is, and go to inputs, change this 5 to 15. from 9:30 Eastern time is when the market opens to 9:45, and then just press OK. That means the highest point and the lowest point of first 15 minutes is automatically marked on your charts. And when you're trading on a 2-minute chart, the trend will reveal itself quickly within first 30 minutes of the market open. And then I use from 10 o'clock to 11 o'clock, I'm using 5-minute chart because the market slows down, the structure becomes a little bit clear, and after 11 o'clock, that's when I'm using 10-minute chart because the trend gets clarity. I need zero noise. I need clean momentum moves, clean continuation moves. I don't need too many candles on my charts. I need less decision making so I can make most amount of my money. And this one trading rule, bro, literally changing the time frames on different times of the day changed my trading completely. It removes 80% of the fake setups that are setting up. Because if you're waiting for the 5-minute candles to close right at the market open, that's just so long and there's so much volatility, you're going to lose the money. But what happens if you're trading on a 1-minute chart? Now what happens is right at the market open, there's so many candles all of a sudden. Now you're overwhelmed and you end up taking the wrong trades and end up going against the direction of the actual market and you end up losing the money. After you have done all this, then comes the 200 simple moving average. 200 simple moving average is the truth, is the confluence that you need on the chart so you can make more and more and bigger money. Let me show you how to add the 200 simple moving average on your charts. First thing, you're going to go to the indicators at the top and search SMA and click on this moving average simple once. You will see a blue line running across your charts. Just double click on this blue line and change the length from 9 to 200. Make sure the source says close. And then what I want you to do is go to the style and change the settings to orange because it's the best settings that you can set up. And then go, instead of the line, just set up circles. Why? Because line gets too messy otherwise. Once you have that, click on OK. Everything's good to go. Now check this out. This is a 200 moving average on a 5-minute chart that will be running across your charts. This will work on a 5-minute chart. This will work on a 60-minute chart. It will work on a 2-minute chart. It works on every single time frame that you're trading on. But direction alone is not enough. You need a precise entry. That's where the step number 3 comes in. Now this is where the entire strategy comes into place. To get an A+ setup, you need 3 things stacked on top of each other. Either opening range breakout and then retest, either a VWAP reject. Now how to set up your VWAP, by the way, go to your indicators, search VWAP, volume weighted average price, just click on this once and now you'll have these multiple bands running across. Just double click on this. We want to turn everything off. This is all the crap that we do not want. Turn the VWAP line to the white line because that's such an important level. Make it a little bit thicker and then go to inputs. Make sure your source says H plus L plus C divided by 3. And hide the VWAP on 1 day or above. Go to visibility, turn your hours, days, weeks, months, and ranges off. Make sure the ticks is off as well. And click OK. This is how you set up your VWAP. Either you can see VWAP rejections, VWAP bounces, level flag structures, the trend alignments with the 200 simple moving averages, the NTZ breaks, clean hourly levels. This is pure confluence. Now let's go over the ORB break. You wait for the market to break outside the NTZ, which is yesterday's range and the pre-market range. Once the market has broken out of the pre-market range, once we have formulated the 15-minute ORB, which is the green line you can see, the prices broke above. What happened? It came back, retested this. That's one confluence by itself. There's not enough confluence for us to take the trade yet. We do not take the trade on a breakout candle. We wait for the candle to come back and retest. But even then, you do not just blindly take the trade. You want to wait for the flag structure to formulate because there has to be more than 2 reasons for us to jump into a trade. One is not enough. So the one is break and retest of the ORB. Second is we are forming a beautiful flag on top of this actual ORB structure. And what happened as soon as we broke out, it made a nice move towards the upside. The retest of the ORB with a confluence is where the real money is made. Then comes the VWAP for confirmations. That's the only line that the smart money cares about intraday. VWAP simply means volume weighted average price. That means based off the volume, that should be the average price of the stock. If smart money buys way above the actual average price, they're going to get in trouble. Or if they sell way below the average price, they're going to get in trouble as well. So that's why when we're in an uptrend, the VWAP will always act as a strong support. As you can see, multiple times we bounce off this over and over again. But once we are below the VWAP, VWAP will act as a strong resistance. We will keep on rejecting over and over again. But one simple rule that I use is if it's above the VWAP, it's bullish. If it's below the VWAP, it's bearish. And then comes the level flag entries. The level flag entries are super simple. If you have a level sitting right here, and that's a continuation pattern, by the way, it pays me every single day. You need to break out of the NTZ. You have a level sitting right there, either above the level or below the level or on top of the level if I see some nice flag forming. it can continue towards the upside. It can make a big move again. It works both sides, upside, downside. But these flag entries can happen pretty much either above the NTZ or ORB or above the VWAP. And it's so easy to execute. Break of the flag becomes an entry. Stop losses on the other side of the flag. The targets is the hourly levels that we marked in the pre-market. This is literally the highest probability setup that I have ever traded. And now I'll show you the real-time examples from last week so you can see why this works. I'll show you another example. This is the pre-market high level sitting right here. We broke above the pre-market high. We broke above the ORB level, came back, retest this zone. What happened? Making a beautiful flag on a 2-minute chart. We're still within first 30 minutes of the market open. There's so many confluences for us to take the trade. And what happened after that? It made a big move towards the upside. I mean, imagine you catching a trade like this. Because the risk is so small and the reward is so big, only need one setup in a day to call it a day and make big money. Even earlier in the morning, it came back and retested this. VWAP made a huge move towards the upside. And the VWAP retest wasn't the only thing that was happening. It was retesting the VWAP and also retesting the break and retest of the 200 simple moving average that we marked on our charts. And it made a huge move. That means the same setup gave you multiple different entries at multiple different occasions. Or even another chart right here. What happened after 11 o'clock? We were on a 10-minute chart. As soon as it touched this 200 simple moving average, this is the hourly level that we have on the charts. This area becomes a solid area for rejection. Why? Because there's so much confluence sitting there. What happened? We made a big move towards the downside. And you jump in here, you take profits at the next level that you have. You have another beautiful example on a 10-minute chart right here. Prices made a big move towards the downside, started bouncing off. We have a lot of confluences with the critical level, the VWAP, and the 200 moving average right here. And it made a nice move towards the downside. Now, this move might look small, but it's a $3 move on SPY. And if you know anything about trading same-day expiration contracts on SPY, you know this really pays. Or another example of Tesla right here. Broke above the ORB, came back, retest, and we have a VWAP sitting right here. That becomes a confluence zone. Prices made a big move towards the upside and it made like a $6 move up. These are just 3 or 4 examples from last few days. Over the past 20 trading days, this exact setup has hit over 93% win rate with clean risk to reward on every single move. And if you want to trade this strategy live with me every single morning, watch my screen, see my entries and exits in the real time. The link to apply for the inner circle is in the description box below, or it will be also in the pinned comment. If it's open, join. If it's not, try again next week. I like to just keep it limited because it's easier to focus on everybody's growth. With NTZ, timeframes, ORB, VWAP, 200 moving average, and the level flag, you have everything that you need to trade consistently. Stick to the plan, stay disciplined, and I'll see you in the next breakdown video.